Good afternoon, everybody. Welcome to Trader Merlin. It is your Thursday edition, getting to the tail end of the week, and man, I'll tell you what, I may as well just hang up my spurs for the remainder of the year. It seems like every time in December that I've been saying I feel like market's going to go one direction, they literally go the opposite. So maybe what we should do is just do the Bizarro portfolio or Bizarro show, which is whatever I think the market's going to do, I'll just plan for the exact opposite. I did not expect to see such a big turnaround today in the S&P. I thought we actually going to see continuation follow through. Luckily, didn't go short on anything, but I was hoping we get a bit further down so I could sell some puts on some stuff and maybe get a little extra premium in my pocket before the end of the year. That didn't happen. Before I get started, we'll get started. I wanted to start with this question from Sonny. It's a long one. Sonny sent in a couple different questions here. Sonny, I'm going to get to one of them today and just kind of dive into that topic here because I think 2026 is going to be a year of crypto ETFs for sure. So let me real quickly read this one here from Sonny. It says, with the current dip in crypto, do you think that this could be institutions driving price down before they are able to access the markets? With all these crypto bills expected to pass, I work for a broker-dealer and we are allowing clients to purchase crypto ETFs and we are allowing clients to buy as of January. So not yet, but January. Now you look also at, so you think that these institutions are driving price down so they can add it to their balance sheet at the lows. No, this has happened back in the day, particularly when we had our Bitcoin futures get rolled out. Sorry, I'm looking at the Japanese rate comment. So let's just set the stage here. Obviously, I would argue that the hottest market segment right now is AI. No doubt there, that's what's been driving this market up, and I'm kind of nervous that that's that kind of piece that could bring this market down as well. However, given the number of different cryptocurrency projects, while there are many different AI companies, most of them are very big established names like Google, Amazon, Nvidia, Microsoft. It doesn't make sense to create too many different ETFs for AI. However, I'm sure we will get some ETFs that are more targeted just towards a basket of AI. They already exist today, but I'm guessing more companies will try to jump into the fray. With crypto, though, we've got like 25, 26, depends who you look to, million different cryptocurrencies. Now, the question will be in 2026, what's going to be brought to market? And just like we had with the Bitcoin ETFs, you guys might remember the Bitcoin ETFs when they rolled them out, there were 11 that came out the exact same day. And there were many more than that wanted to come to market, but the SEC just approved 11 of them. To date, I have not looked. I should look back and check my table that I built out for this one. But most of them don't have any volume. And when they came out, I was saying that probably within 6 months to a year, most of them will just fizzle out. No one will even look at those ETFs for Bitcoin, just the main ones. And as this crypto industry expands, let me bring up a table here. Hold on one second. I go to CoinMarketCap. We've got things like CoinMarketCap. If you look at the bottom here, just a few weeks ago, I was teaching a class and I was talking about how there's 24, almost 25 million cryptos. According to CoinMarketCap, there's 28.47 million. You can see in the bottom left-hand corner over here where my cursor is moving around. You've got 28.47 million cryptocurrency projects. You've got 906 exchanges. Let that sink in for a little bit. You talk about fragmentation. There is a ton of fragmentation in that crypto space. Now, for the most part, if you are uneducated in the crypto world and you just don't really know what's what, you're probably best staying in the top 10. Just stick with that top 10 or top 15 biggest market cap ones. However, when we roll out here and go into the further down the list and get into things like, we used to be able to fetch coin, now it's artificial super intelligence. So funny, this used to be called Fetch, and they changed their name to Artificial Super Intelligence Alliance. And of course that is a grab towards AI there. You'll start to see some other players in the space, but you certainly should know more about those projects, what they do, and have a greater understanding of what you're buying into. Normally, the big market cap stuff is probably the safest place to go. Now, one of the things I teach in my crypto class is understanding how that market is fragmented. For example, we have things like your layer one solutions. Those are the base layer, the protocol layers that record everything, your record keeping system essentially. Like you're looking at things like Ethereum, Cardano, Avalanche, Algorand, Sui, Aptos, the big names. But then you have things like oracles that help blockchains get external information from the real world. You have DeFi marketplaces like Uniswap, PancakeSwap, Hyperliquid. You've got energy transfer protocols. You have monetary systems that are designed just to move money back and forth, like Well, I guess Ripple would be the prime example there, where it's just for money transmitting, and that's pretty much it. But you could also add Stellar Lumens on that one, and Hedera Hashgraph, and IOTA. You have some projects like IOTA that are designed for Internet of Things. So we have this segmentation within that marketplace. 2026, from what I read recently, there's 146 ETFs currently applying to be released in 2026, like almost 150 of them. And my guess is that will probably grow even more. So most of those are going to be either an index, which tracks the broader market index, like the top 50 or top 100, and there already is a couple of those out there today. But some of them will be very specific and targeted towards things like, Sandbox, or, there's so many different ones. But just talking about like metaverse gaming niche markets within crypto, and those will all come to market. So I think 2026 is going to be a great time for diversity of products within that ETF space. And again, I don't really have my watch list over here fragmented at all, but maybe it might be on my schedule of things to do, is break this apart so my cryptocurrency folder has subsectors within it of specific market segments, like meme coins, or for example, Optimism here. Optimism is a layer 2 solution for Ethereum. So is Arbitrum. So I can make a whole market segment or an ETF that are just Ethereum layer 2 solutions. Now, why is that important? Well, look, if you guys follow the news yesterday, I'm curious how many of you, especially those of you in the crypto space, how many of you watched the announcement yesterday from Coinbase, the Everything Exchange? Anybody watch that one? Let me know. It says yes or no if you did or did not. If you didn't, I'm going to actually see if I can post a link to it, or maybe I'll just retweet it out on my X page. Nah, dog, no, missed that one. Man, you guys are missing a pretty significant piece. For those of you who are interested in crypto, wow, not one person. I've been saying on this channel quite a bit that I think the next evolution of financial markets obviously is going to blockchain, right? You're going to see more projects move their businesses onto blockchain. We're going to see the NASDAQ, New York Stock Exchange, bring their exchanges onto a blockchain so that it's easier to keep record, all that stuff. Coinbase yesterday did an announcement. Let me see if I can find it for you. I'll just retweet it out. One sec. And then you can just go to my page and find out. It's they call it system upgrade. And essentially what Coinbase wants to do is they want to have an exchange where everything is done in one place. You can trade stocks, futures, forex, options, cryptocurrencies, any tokenized product, any product that's a financial service product can now be traded at Coinbase. And apparently, according to them, they already have it set up where you can trade stocks on Coinbase, you can trade futures on Coinbase. They have predictive markets now on Coinbase, and exactly, Ollie, and Robinhood is doing that too. This is the future of financial markets. What is going to happen to the dominance of somebody like a Schwab or an E-Trade or Ameritrade, whatever? They're going to start to feel the pinch here as customers move away. From an ease of use, for me personally, I've got accounts all over the place, and honestly, I think it's messy. I think it's a pain in the butt. With what Coinbase is attempting to do is, I don't need to open separate accounts for futures, or separate accounts for options, or separate accounts for equities, or separate accounts for forex. It's all on one platform, and all of those assets will be tokenized. I think it's pretty phenomenal. Let me see if I can. I think might be it here. Hold on, I'll retweet this out. Repost. All right, so if you go to my Twitter feed on Twitter, I think I just posted that one out there. It's this guy right here. So it's this new one where they're talking. It's very brief. The whole presentation was an hour and a half, but really there's 10 minutes of it total that I thought were just really, 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 really phenomenal and diving deep at the core of what this is. And I agree with you, Ollie. I'm not a big fan of the predictive markets. I think it's just straight up gambling, but it doesn't matter. If you bring everything under one roof, you make it so much more easier for your customers to do business with you. And it doesn't matter whether they're doing predictive markets or not. Maybe I just want to buy Bitcoin. Okay, I have a Coinbase account. But now, because I have access to all these things, I might start trading options. I might start trading perpetual futures. I might start trading forex. I might start trading predictive markets. And all of a sudden, Coinbase starts to generate more and more and more revenue. So this, to me, is like one of those watershed moments where Robinhood is doing it, but Robinhood hasn't made as much of a public statement about everything being connected. Coinbase said specifically, we want to be the everything exchange. And all that revolves around tokenization. So no longer are we going to have really shares. You'll have tokenized shares. You're going to have tokenized futures. All this stuff will be tokenized. And the reason I bring that up is if you look at what I was showing you earlier, which is Arbitrum and Optimism, these are all layer 2 solutions that are designed to make Ethereum more scalable. But then you have Base, which I actually don't even have on here. Let's go Base. Yeah, this should be it. So here's Base. This is the project that Coinbase is using. This is their protocol. Base is built on top of Ethereum. So they're trying to utilize the infrastructure of ETH, which is the record-keeping system, but all their business will be done on the Base layer. It's a layer 2, and they'll do all the transactions there and report down to Ethereum. So to me, this is really interesting from a business perspective. Number one, we're seeing a change in the way the entire financial system is functioning. Just because you have consolidation and all of a sudden making things easier because of unification of blockchain technology, applying these products to the blockchain, and tokenization. Second part here that I think is interesting is for you and I as investors, if you look at the spectrum of investment opportunities and say, all right, long haul, if we do in fact see this shift continue on, and Robinhood and Coinbase have both said Ethereum is the layer, maybe we start adding some more Ethereum to our portfolio, which chart doesn't look that great right now. But I'm not talking about the next month or 6 months. I'm talking about the next few years. If Robinhood and Coinbase are both tipping their hat and using Ethereum, then the other companies coming online will most likely use that as well because there's an interoperability between those. If I use Base tokens, right? So Base is the layer 2. If I use the Base token, that is standardized with EVM, Ethereum Virtual Machine. Robinhood has the same thing. Theirs will be EVM compatible, meaning I could swap not only through Ethereum, but I could go and take my products from Base and move them over to Robinhood seamlessly. That adds more liquidity to cryptocurrency and digital assets overall. And yeah, it's a good comment there, Eb. eChart did not get that good news. No, it didn't. And again, I think this has a lot to do with the overall doom and gloom perspective that's happening in crypto right now, which just seems like it cannot get its feet underneath it. Every time it starts to rally, it just gets beaten back down. So yeah, I'm really looking longer term here. Definitely looking at that longer term. Will there be an additional charge to use Coinbase compared to Schwab? Yes. So, and that'll be a big shift there, Les. Right now, if I were to trade 100 shares of Apple on Schwab, I don't pay any transaction costs because stock trades are free. I don't think that's going to be the case at Robinhood or Coinbase. Because you're trading things on a blockchain, you're trading tokenized shares of Apple, there will be transaction fees. Now, Coinbase is notorious for having high transaction fees. They are definitely one of the heavier ones. I'm just real curious to see if Coinbase has integrated that in their site yet. I don't think they have. Derivatives got a lot easier. Go long or short with leverage on futures, perpetual, just a few taps. All right, we already know that. Let's go. So they don't have much here on their site. So the site hasn't been updated, but their app has. And you can see here, go to derivatives, and I can now trade futures products outside the norms. And normally, if you go to the CME or ICE, you can only trade Bitcoin futures. You can trade silver. Well, CME or ICE, you can only trade Ethereum and Bitcoin futures in the crypto space. But here you can see Solana, Ripple, gold, silver, Bitcoin Cash, Stellar Lumens, Chainlink, a lot of other cryptos you wouldn't normally trade, including natural gas. Yeah, it's wild. But pretty soon, they will be able to trade anything, is their statement. Jeff said, we don't own the trade, Coinbase does. Yep. So one of the challenges today is when you buy 100 shares of Apple, you don't really own that Apple, right? You have an IOU. So let's say you're a Schwab customer. Excuse me. Let's say you're a Schwab customer. When you buy on Schwab, Schwab purchases those shares, and then Schwab sends them over to the DTCC, the Depository Trust Clearing Corporation, which is a government-sponsored entity, and they keep a record of all of the shares. So really, Schwab gets an IOU for the 100 shares of Apple, and then Schwab sends you an IOU for 100 shares of Apple. You're separated from your money in two different ways. In the future, because this is tokenized, you may actually own those assets and be in control of your private keys. So cool. We basically own a share of Coinbase, Express as whatever investment you choose. Thanks, Drew. Well, I mean, I'd like to dive deeper into it, but I wanted to there was a couple things in there I didn't quite get, and I wanted to watch that whole interview again. I've been too damn busy. But for those of you that want, I would go and try to watch the full version. If you are into it and want to understand what the future of finance holds, I think that's going to speak volumes to it. You're going to see all assets traded on one basic platform. And Coinbase, in my opinion, led that charge. Now, if you look at the price chart of Coinbase, well, it makes you scratch your head. Here's Coinbase. I think Coinbase is getting slaughtered just because of the overall crypto sell-off. You would think that today would have been a nice big rally for Coinbase based off that news. But markets did not see it that way. Started off okay, but then gave back, and now you're sitting right at a demand zone, right at lows, right around 240 on Coinbase. I was thinking of buying some leaps on Coinbase, but I don't know. I've been a little frustrated with my calls this week and last week for the market, so I'm kind of just gun shy and just going to step back a little bit. But Coinbase, not looking great from a technical perspective. It was over 440. Now you're down almost 45, 50% here based off a current price of $239. But on the long haul, if Coinbase can pull this off, guys, if Coinbase can pull it off, I do expect this to actually move considerably higher over time. Their main thing they're going to have to worry about is getting more customers over to their exchange. They obviously have, there's a huge number of customers there. It's definitely in the tens of millions. But now when you have your customers there, most of them are probably fairly inactive. The goal is to make everybody understand that, I can trade stocks, futures, and options here on Coinbase app, make it easy for people to use. Then what we might see is companies like Charles Schwab try to change their business model. Because if they do start to succeed, if Coinbase can pull this off, it's going to start to eat away at some of these retail brokerage firms like Schwab, like Fidelity. They're going to start to feel the pinch here. So I thought that was rather interesting. From Sonny's original question, which I deviated quite a bit here and just went into the Coinbase pieces. Now you're asking if institutions are pushing it down. I don't think it's necessarily that they're pushing it down. I do think that at certain levels, institutions will be accumulating cryptocurrency. I think there'll become a point where they go, okay, we'll buy some here, knowing that you're going to see a lot of retail demand for ETFs or ETPs in 2026 because so many new ones will be coming out. Robbie asking why bearish? You mean why the bearish trend or why bearish for Schwab or which part? Let's see, what did Dan say? Some bigger fish will jump in and acquire Coinbase if they try that stuff. It could very well happen. I think, personally, I think they might be a little bit too big right now, if you look at Coinbase. Remember, Coinbase has got backing. If I'm not mistaken, I do believe that Goldman Sachs is invested in Coinbase, and BlackRock may be invested in there as well. I need to go and look and see who all the investors are for Coinbase, but there's big institutional money there. Let's see. Who are... Just real curious what AI tells me. What does it say? So it doesn't show Goldman, but according to AI, Coinbase is backed by Vanguard. Oh, there's BlackRock. Vanguard, BlackRock, State Street, Susquehanna International, Jane Street. You got Mark Andreessen and Brian Armstrong, Union Square Ventures. So there are some big names in here. I thought Goldman Sachs was in there. I guess I was wrong. I knew BlackRock was. But, BlackRock, as Larry Fink said, he's all in on tokenization, crypto. He's very different approach than Jamie Dimon, who's like, I don't like it. Well, I think BlackRock's going to take over. Rob, Bitcoin's still down. And why is that? That is, you're seeing with crypto right now, legacy money, meaning long-term holders are selling their positions. And we can tell that by looking at the blockchain. If you go to Chainalysis, which is one of the analyst sites, they actually have a little thing that shows long-term holders are actually selling their Bitcoin. And I was in Irvine today. I went to Jordan Matthews' strategic investor class and talked about digital assets for a little bit, which was a lot of fun. Always great to go into a live physical classroom. I made an analogy, and let me know what you guys think. How would you react to this? You live in a perfect place. It is just amazing. Every day is just the perfect weather. It's just awesome. It's great. You love where you live. It's a perfect place to live. And then everybody knows that on December 1st, almost like clockwork, every 4 years, December 1st, in that fourth year, it just turns into ice cubes. You're talking 50 to below temperatures. It's unbearable. Your pipes freeze all the time. You never want to leave your house, and it lasts for about a year because it's done it every year, or every 4 years it does this. What would you guys do? If you lived in that area, in this hypothetical example where it's perfect for 3 years, but that fourth year is absolute purgatory, what would you do in that fourth year? You'd pack up your crap and move, right? You'd be like, I'm going to somewhere where it's nice and warm. Have a second home for that year, right, Alex? Yeah, I'm getting out of here. There's no way I want to tolerate it. Go trip somewhere else. That analogy, that simple analogy, I think is exactly what happens every 4-year cycle. Because it's happened so often, people, whether they're institutions or retailers or the whales out there that have a lot of large positions, they're just selling out right now. And I think that that's what we're getting here is the vacation time, if you will, for Bitcoin holders. Now, I don't believe that it's going to sell off as it has historically. I've said that many, many times. Anyway, says, I'm waiting for the selling to stop to buy more Bitcoin. Well, that's a big question is, when is it going to stop? I would love it. I'd love for it to stop here, particularly because if it hits 76,000, I got to go up to San Jose and buy Ed a drink and dinner. As it stands, I owe Big Eb dinner for Fed rate cuts. I'm losing dinners left and right here. The only person I'm winning bets with is Bill Addis. That's it. I'm just going to bets with Bill Addis is all I'm doing from now on. 2026 is just Bill Addis bets. I'm just kidding. So, I hope it stops here, but judging by history, I don't think it will. And that's why I've been kind of bearish on this one for a little while. It was supposed to start in November. And the funny thing is, when I look back here, no problem, John, have a great day. When I look back historically, like the 2012 and 13 sell-off for Bitcoin, those were like 80% and they lasted 12 months exactly. Then the next one was about 80%. And the next one was about 80%. And all of those about 12 months. What's interesting is it felt like it started in December, a few years, about 12 years ago. And then all of a sudden it was November. This one, the peak was October. So it feels like people are starting to anticipate the 4-year cycle more and more and more. And that's what's causing the early sell-offs here. So bizarreness out there. I still don't understand why it happens every 4 years. There's a philosophy that it has to do with the 4-year cycle, or with the halving, has to do with, I don't know, insider selling. It's just a bizarre one. So Sonny, I don't know if it's necessarily institution selling. I think that what you're getting is just the 4-year cycle piece. I think that's just money moving out of crypto because of expectations of more downside movement. If we get a 50% decline, which probably will happen, that takes us quite a bit lower. I'll go to our peak here and just go down 50% so we can kind of see where that might be. One sec here as I zoom out because I'm going to have to go back a bit further here. I think I'm a little bit further past it. There you go. 50% drawdown would bring us right to around 62,000. You're referring to Game of Thrones. Yes, winter is coming. Absolutely. Winter's here. Now, I would argue, Dakota, that winter is here for Bitcoin. And why? I don't know. The 70,000 looks attractive right at the breakout from October 24. Yep. I like this low point around 74. You did have this real big breakout, as you did point out, right around 70,000, this huge move up that happened in November of 2024. Yeah, that's a nice target as well. My gut tells me we're going to be going lower. But, it is what it is. Again, with my crypto, with my Bitcoin, most of you guys know, I'm not selling. And if we go off of statistics and historical norms, I drew this out yesterday. Since it started in October, it should end in October of 2026. Going off of historical norms, that should be somewhere down around 30. If you go about 70% slide, you're talking about 37,000 on Bitcoin. Now, let's hope it doesn't get there. But that's what the trajectory would look like, that angle. And we're actually accelerating faster. Notice how quickly it's sold off since October. That's been pretty brutal. Normally, it's not that fast. And I'll go and show you the previous time here just so we can take a peek at that. Here is the peak in November of 2021. And, it sold off for 221. Let's go and do monthly because I like it's just easier to look at months. Bear with me as I find this for you guys. Okay, so this one here, that's 7 months. To the dead low was exactly 12 months. It started in November of 2021, ended in November of 2022. Wild. And notice at the beginning of that one, it also sold off aggressively, retraced back to the trend line, and then continued to sell off. And if we look back at the one before that, all right, I'm just trying to show historical precedent. Here is the December of 2017, sold off for 13 months. Actually, technically the low is lower here. Again, exactly 12 months, and this one sold off 84%. Well, what about the one before that? It's just uncanny how this 4-year cycle works. This one was exact 14 months, so this is a little bit longer than the other ones. but 14 months and an almost 87% slide. So the slides are getting a little bit better. They're not as extreme, but these things just keep happening over and over and over again. It's just bizarre. I don't get it. Big Eb says, I don't think institutions follow the 4-year Bitcoin trends. Which Big Eb is kind of why I've been saying I think this time is different. I don't think we're going to get a 70 or 80% slide. I think what you're going to get is historical retail people selling off. Exactly. It's Bitcoin 26, no good. We'll see. We might continue to get more downside movement here. I want to buy more. I'm looking to buy some more Bitcoin. I'm just kind of holding off for now, just until I can see what happens at these current levels. As I mentioned, the way we are trending right now leads me to believe there's more downside pain ahead. Just look at the way it's sold off. Lower lows, lower highs. We had a little bit of a bounce, which gave it felt good for a week, a month, and now all of a sudden we're coming back down towards those lows. So I don't know. This doesn't paint a very good picture for me. I feel like it's going to end up getting lower here, which is fine. If I buy more Bitcoin down to 60,000 or 65,000, I'd be okay with that as well. The goal for me has always been, not always, but goal has been double-digit Bitcoin. I'm not quite there yet. Very close. Very close. So, Sonny, that was a long-winded answer to your question there. We spent literally 27 minutes talking about that one. But, that is this ETF Mania. And I do think in 2026, Jeff was saying Bitcoin 2026 no good. Because we're having such an influx of new ETPs or ETFs, exchange-traded products, and many of those will be asset-backed, meaning they have to buy the physical crypto that's in them, I actually look at it as a driver. Now, when does that happen, right? When do these ETFs come out? I'll try to build a calendar for you so we can see what ETFs are slated to come out. I think it's called like a Schedule 9 with the SEC. There's some form they have to fill out, and it can take up to 240 days for the SEC to give you official approval. But given our new SEC chairman, I really feel like this time, which Paul Atkins, I think you're going to start to see these processes move much faster and the approval happen much faster. So we should see a lot of new products in 2026. Those products will, I think, fuel more demand because, let's be honest, if you guys had to choose of just buying Bitcoin or Ethereum or buying an exchange-traded fund that had, let's say, 50 different cryptos in it, which would you buy? My guess is most would probably say, I'm going to buy the portfolio one because I don't know about crypto. I don't want to take the time to research it. I just want to have exposure to it. So why not buy a product, an ETF, that has 20 positions or 50 positions? Right now, the current one is 10. Merlin, can you talk about leverage ETFs and how they targeting this Magnificent Seven on another show? Sure, we can do that. These trillions sloshing around probably helped. What did it say? In 2021, interest rates were going up. While this market we're cutting may be different. Well, the reason we saw crypto crash in 2021 into 2022 had nothing to do with interest rates at all. It had to do with over-leveraging. It's called a rehypothecation of funds, where companies were taking your deposits of crypto, lending them out to somebody else who was paying them more interest, and they continued to do this until there was no new lender, no one that was going to pay to take those interests. Hey, Don. Sorry about your Chiefs, my friend. Hate to see Mahomes go out like that, but actually, I'm not sorry the Chiefs missed the playoffs. Not really. About time you guys took a break. Good to see you. I hope things are well done. I'd buy into Merlin's ETF because, Dan, I'll tell you what. Don't buy my ETF in December. Buy my ETF January through October. Phenomenal this year in January through October. December has been a rough one. November and December have not been good, but we'll go. We'll move on from there. So to Sonny, I think institutions may be manipulating things quite a bit, but I think it's just that legacy impression of the 4-year cycle. First off, Don's a Chiefs fan. Now he's saying the Chiefs are dumb. The Chiefs are a pretty darn good team. They played like garbage this year. It was really. The thing that sucks is I have Patrick Mahomes as my fantasy quarterback, and I'm actually the number one team. So now my quarterback goes out, and I'm scrambling to find somebody right as playoffs start. So not looking so good for me. All right, where are we at? Time-wise. So I saw the comment earlier from Dakota. Let's go real quick and talk about rates, talk about what went on with Japan. We'll talk about what went on with the UK and with the euro. Here is the list of rates. Let me just scroll down here. We'll get to Japan. Definitive it hasn't updated yet. It says tentative, so it should be any time here. Oops. So a few things did come out today. And as we talked about yesterday, no, it's going to be a 25 basis point increase for Japan. That's pretty much baked in. And I mentioned the other two, which is the British pound and the euro. The euro was expected to stay the same. No big shock there. The British pound was expected to cut 25 basis points, and they did. So if you look at the movement out there today for British pound, let me get rid of my laundry list of stuff here. Let's go into spot Forex, and we'll go to GBP USD. You really didn't get too much. You just had long topping and bottoming tails. But again, this is why it's so fun to be around during those announcements. You can see on the 5-minute time frame, it's like very clear where that announcement came out. Came out at 7 a.m. on the dot, and you saw a few hundred pip move straight up on that one, and then gave most of it back. Same thing with the euro. So this is the 5-minute time frame for British pound, who cut 25 basis points, and then you had your euro USD. They kept right where they're at, but I think this is kind of a sympathy play with the British pound, and they pretty much unchanged on the day, so not much of a big deal there with regards to the euro. So that was your kind of big economic news. The other stuff that we would have seen here is the unemployment claims, which was in line with expectations. You had crappy news from the Philly Fed Manufacturing Index, but that's not really that significant. Other than that, not too many big, heavy-hitting items. I'll get to the rest of them here for tomorrow's show in just a second. So let me run through our top 8 here. Not a lot of exciting stuff. From the Bitcoin perspective, we had a pretty good about face. We'll go back to our daily on this one. It was starting to look pretty good yesterday. Gave back most of it, and then today we just broke new lows. My guess is, based off this, you're probably looking at challenging that 80,000 here soon. It just cannot seem to hold anything. Just every time it seems like it gains strength, it just starts to show weakness and head lower. So that tells me that the general consensus for Bitcoin and crypto overall is selling off. Sorry, Don, because I know you're holding a bunch of Bitcoin. That's not good news. Oh yeah, you're right, Liz. I should talk about the CPI, but let me just. All right, we'll go back. CPI. In theory, if you believe the data, great news. If you believe the data, CPI, great news, right? We were way lower than expectations. They thought we was going to actually see an increase at 3.1, as I actually thought we'd see an increase as well. We came out at 2.7. One of the main reasons for that was our next guy here, which is crude oil. Crude oil actually had a pretty big jump today, but gave back most of those gains. But that energy price certainly helping out the inflation numbers. When we look at the other factors driving it, we can talk about housing. And one of the things I was looking at the other day with you was the S&P Case-Shiller Composite 20 Home Price Index, which is a mouthful to say. And that number is starting to look pretty ugly as well. If that continues to drop, that actually does help the inflation data. So let me show you that one here. It'll take me just a second to find it. It's always a scavenger hunt when I try to find economic data on the live here. But I think that comes out the first week. Nope. Let's see. S&P Case-Shiller Composite 20 Home. There it is. So here's your S&P Case-Shiller Composite 20 Home Price Index. This is home price appreciation over time, or depreciation, right? So let's zoom in past the whole COVID craziness. That trend is about as clear as you get. We were at 7.5% year-over-year growth in early 2024, and that means in those major 20 metropolitan areas, the value of homes were increasing at about 7.5% per year, outpacing inflation, doing great. Of course, return on investment is great for any homeowner. Now you're looking at 1.4. Now it did come in line with expectations, but that still was a decline from the previous month. This to me is not great data. Not great data because it means that people are losing value in their homes, but also this does help data because when you look at home prices dropping, that usually will impact inflationary data as well, and this is one factor for inflation dropping lower. So you've got crude oil dropping, you've got housing prices starting to slow down and drop, or at least not appreciate as much. And that ultimately ended up giving us that nice CPI reading. Look, when crude oil starts to bounce again, we'll be singing a different tune. But right now, that trend is pretty clear to the downside. So I'm not that concerned that inflation is going to have a rise up yet. Today, you had crude oil was up 0.34%, putting it in your number 4 position on our list for the day. $56 even for crude oil. Oh, I did receive a message from my friend John, and he was like, is this that bear trap that they're going to try to get everybody to go short on that break? And it very well could be, but honestly, my calls have been off all across the board because of the whipsaw and choppiness in some of these markets. So, my gut tells me you're probably going to see crude oil start to spike here, but the trend is definitely slow and to the downside. It's all a question for me about what's the extraction cost. At what point does OPEC say, no, screw you, we're not going to sell our oil for $56 a barrel. We'll sell it for $65 because we make more money and we drill less oil. But who knows? I'm not making them. What's he say? How is energy driving it down? Energy's up 15% this year. Oil is down, but gas is still high because oil is a much bigger component in the index. The weighting of oil in the CPI calculation is much higher. Plus, remember, oil is one of the base components for plastics and manufacturing goods and services, right? When you look at something like you mentioned, gas is still higher. That is if you're talking about gas at the pump, that's a result of refining processes. The cost of oil impacting other products like plastics, as I mentioned, and other goods and services, that having dropped so much does help the inflation rate. The price of gas is a different component. Electricity is up 14% nationwide. If it is up, I don't know the numbers, but oil is the more heavy weighted component. I mean, if we go, I don't have time to look at it right now, but if you were to pull up a breakdown of the weightings of CPI, which is a bit of a mystery, honestly. I've looked at that many times, but oil tends to be one of the higher heavy-weighted ones because of its importance. Rumors of war with Venezuela. Wouldn't oil go nuts? You would think so. And Russia, not necessarily a war with Russia, but tensions increasing with Russia. But yeah, I like that big F because it'd be a very short war. It would be, but it all depends on who got involved. Russia would probably back Venezuela right away. But we shall see. And who knows, maybe even China would. We got a lot of enemies out there. But yeah, it certainly could cause a short-term spike in oil. And yeah, even though that chart looks like it's sloping down, my gut is just screaming at me to buy oil. I've not bought oil. I've not done it. Not going to do it yet. But, I was looking at this the other day. Let me just zoom out here and go to a weekly for you guys. Just make it a little bit cleaner from my chart perspective. As long as we get out of that giant sell-off we saw in 2020 from that negative $40 a barrel, this next demand zone or next level down at $53, and to me that just feels like the floor. It just feels like the floor. And if I'm looking at $56 crude oil right now, maybe I can go into USO. I'm not going to play with UCO because I don't like the leverage stuff. And right now you've got $67 for USO. Maybe I'm looking at selling the 64 puts and just doing less than 30 days. Maybe try to do a weekly if I can get enough. Just remember, Venezuela is all about the oil and natural resources they have there. Yep. Agreed. That's their major thing. There was talk about them doing an oil dollar, having their currency backed by oil. But you've got just massive corruption down there and bad leadership. So I wouldn't stay. Wouldn't deal with that one. But yeah, Dakota, I do think that the crude oil piece or the Venezuela piece could have an impact on the price of crude oil, and it just leads me to think that we're going to start to see some pops to the upside here. But the trend is very clear to the downside. I'd be going against that trend, and right now I'm just not in the mood to do that. All right, so we had Bitcoin looking pretty ugly, down 1.3%. Again, I think that 80,750 mark is pretty ugly, and if that doesn't hold, then we are headed for much lower lows. That number does change here. If you look at the spot price, I'll put the line across that dead low here. 1 second. The spot price for that would be 80,619. And right now we're at 85,621, so about $5,000 away. Not too close, but not too far. What else do I have on here? Let's go back up our list again. We did the 10-year. U.S. has the most oil supply now. We do. Yeah, it's funny, Rob. You would think we'd be completely self-sufficient, independent on this one with oil, but we should have enough, or we do have enough to be self-sustaining. But yet, it seems like we're always buying from the Middle East. Like we want your oil. No, why don't we just keep ours? I know refining process. It's a different type of oil as well. Another show for another day. That 10-year. It's been trying to break above that 4.2%, and as I mentioned, the longer it tries and doesn't, the more likely it's going to sell off here. The question I have is how low does this 10-year yield drop? We fell from 4.2% and a little bit higher than that. Now we're at 4.12%, so slightly lower. Nothing that damaging, but watching that 10-year yield fall obviously has a lot of positive ramifications for our market. It's cheaper money, it's refinancing the debt at lower rates, and it's also affecting that 30-year fixed rate mortgage. So for those of you looking to buy a house, you want this to tank 10-year. Gold continued on, actually a bit of a shooting star right at all-time highs today. Actually just breached all-time highs by a hair. I will put it right here. All-time highs were right up there at 4,398. Today we actually breached above that. We hit a high price of 4,409, so all-time high for crude or for gold, but a little not quite a shooting star. Let me take that back. It's not quite a shooting star, but there is definitely some negativity in that pattern. We can get rid of this now, that breakout. You've really got just a beautiful uptrend going, which we talked about a while back. Pennant formation breaks out. If we get a close above this 4,000 mark, I think you'll be off to the races yet again. While we're on it, let's just bring up SLV, because SLV had that giant jump yesterday. A little bit of a hesitation today. It was down just ever so slightly, 1.56%. That's coming off the heels of that really big update yesterday of over 4%. So silver still the shiniest metal out there. Moving up to our dollar index, the old Dixie, didn't really, at the end of the day, didn't really do much. You can see a small green candle here. So I don't expect there to be much of a bounce. If anything, it'll have a little bit of a rise and then come back down towards that bottom yellow zone that we have on the screen, right around 97.85. We looked at crude oil. Tried to rally. Had a big gap. It actually gapped up to the high price of yesterday and then just gave it pretty much all back. We were up 0.34%, but not the best looking chart. I'll keep waiting on this one before I make a play either way. Podium time was all indexes today, so a stark about face. Yesterday, as you guys know, I had bearishness on NASDAQ and on S&P. Just felt like the momentum was really starting to bear some negativity, and no, we reversed. 0.65% move up for the Russell, which technically isn't the greatest pattern, doesn't really look that great. The S&P, you have a bullish Harami formation, technically. You have an bullish Harami formation out there for S&P. That jumped it up 0.77%, but I don't get any great pattern formations other than the Harami formation, and that's a pretty stretched out Harami there, so not that great. Yeah, bullish Harami, but look, technically when you trade a bullish Harami, you're going to go off the top of today's trading. Well, that would mean I have to wait for it to get above 6,872 before I started to make a trade on this thing. Well, that's 42 points away. That's over 0.5% away. Not that good. Not that good. A lot of selling on that Russell tail. Yeah. If you go to Art Russell, sure. Why? Because you look at most of the gains were given up that. I mean, it was a nice positive day and then gave it all back. Now you look at the NASDAQ. NASDAQ was saved today. This is another bullish Harami. Same basic principle as what we saw with the S&P. Full candle except for the little bit of tail fits within the previous day's body, so that's obviously a pretty nice sign. Bullish engulfing formation, a bullish Harami formation, which does lead you to think tomorrow will be an update. But I'll tell you what, I think the last 3 days, when I thought it was going to be bearish, it was bullish. When I thought it was going to be bullish, it was bearish. And to tomorrow, I feel like it's going to be bullish. It'll probably be bearish just to spite me. And what were some of those factors today? Obviously, Micron was a big piece of this. I didn't think it'd be that significant, but they made some statements at their press conference I didn't get to see, which were just they said unprecedented demand for its AI products and for AI, and that I think did cause a bit of optimism throughout the market segments here in tech. And so when you look at the Magnificent Seven, start at the bottom, you had Apple, which has a fantastic hammer formation. I don't know if you guys, if you can trade Apple, look at this bad boy. Great hammer after a real nice sell-off. Boy, I'd be looking, if I could trade Apple, I'd be looking for a long tomorrow, long above 273.61. Based off that, I don't know. We'll see if we get that follow through tomorrow. So that's a good looking pattern out there. Oh, don't even get me started, Big Ab, on DJT. What a weirdo thing that was. I'll briefly discuss that one. Microsoft was a fantastic day for Microsoft, but gave back half of its gains in the second half of the day. It was still up 1.65%. I mean, these are some pretty nice numbers. These are really looking good for the Magnificent Seven. And that's coming on the heels of some pretty bad days for about the past week and a half. Nvidia finally getting a break. You look at the jump here that Nvidia had, it was 1.87%, but look how much it sold off over the past week. I'll just go from the peak here on December 8th to where we are right now. You're looking at a slide of 7% in 8 days. That's pretty bad. And that's not even to the low. The low would have you down about 9.41%. So there still is definitely some pain there. I think you're going to get some value hunters, some bargain hunters that look at NVIDIA and just go, I got to buy it and get a little bounce here. This also is a bullish Harami formation, even though it is not a green candle. It's a red candle. It still is a bullish Harami. Google, 1.91%. We had that great breakdown yesterday below that kind of trend channel we had drawn in. Today you have a spinning top formation after an aggressive decline. If it had really climactic volume, I'd like it better, but I would argue that this is probably a fairly bullish pattern for tomorrow. I treat it the same way. I'll put a line right across the top of today's activity, call it a bullish Harami, and say if Google opens below 305.26 and then crosses above that, then I would say there's your long entry on Google. Right now, it's actually down just a little bit in the after-hours session. Meta, 2.3% gain today. Technically, nothing really to speak of here other than it feels like that next leg up is going to go towards that 690, which won't happen tomorrow, but maybe over the next week or so, hit that 690 mark. Amazon, thank goodness, when my portfolio did a nice little reprieve here. Amazon was up $5.50, $5.49 per share. Love it. That definitely helped out my position, but technically it doesn't look great. We still look like we're weakening here over the past month for the December. Still looks fairly weak, but yeah, nice little pop there today. I'll take it. Take the upside. And of course, Tesla coming off the heels of that California potential shutdown had a nice recovery. 3.45% move to the upside. $483.37. Love it. So Wolf says, I think down tomorrow, the rest of the year, and the rest of the year. Maybe NJ have run brain resets with the bourbon. Maybe I'll reset tomorrow with the bourbon. I really, like I told you guys, I stopped drinking. Pretty much stopped drinking. I say that I'm going to go have a beer tonight. Watch the football game. I'm going to hope. I don't know who to cheer for tonight. Who do we cheer for tonight, guys? It's the Seahawks versus the Rams. They're both first place in my division. I'm the 49ers fan. I don't know. I feel like I'm cheering for the Seahawks to win because I believe they have a worse record in the division. Well, Ollie, we know you're going to cheer for the Rams. It's going to be a good game. I mean, those are two pretty good teams. The Niners division is the best division in football by far. Guys can't argue that one. You can look at the three teams of the 10 game winning record. All right. What was the other comment you guys? Oh, DJT. So I don't know if you guys know DJT. DJT. Did you guys ever have that one friend who, when you're growing up, it was like the kid that no one really liked, but that kid would always try to do the things that the cool kids were doing. And it would always changing. Like his clothes would change and everything would just constantly change because he was just trying to be the cool kid. That's DJT. DJT. Absolutely. Look, DJT started off as a media company, right? This was Truth Social. That didn't work out. They're losing so much money on that one. They're like, we don't know what to do. Then they go, we're going to get into crypto and digital assets. Then they start issuing ETFs, exchange-traded funds that are into crypto, of course, because Trump's going to tell them what to put in it, and we could make a bunch of money there. Well, that didn't work out. So now they're like, well, what do we do? What do we do? Now they're getting into energy. So they merged with a company, and I'm trying to remember the name of the company. I think it was TAE, Tate Tech, right? At least I think it's Tate. Yeah, so I think that this is the company that bought them or merged with, right? It's a nuclear fusion company, which I think is kind of interesting. Now all of a sudden they're getting into energy. Okay, so you started off with social media, you failed. Started off with crypto, then you moved to crypto, you failed. And now you're like, oh, is that the ticker symbol? No, I don't think it's Tiagro. It's Tay Energy is what the name, Tay Tech was the name of the company. I thought their symbol was Tate. But look at DJT today. I mean, you talk about a massive jump. Of course, I still wouldn't touch it with a 10-foot pole, guys. I'm sorry. I don't feel like this is a solid business. It's just like kind of going with whatever way the wind blows them. It's like, oh, well, we'll make money here. We'll make money there. No, Jeff, not taint. Although some could, never mind. I'm not even going to go there, Jeff. Not even going to go there, but thanks for that one. Basically, an energy company got involved with them for some preferred treatment, in my opinion. I think you're probably right. Tate Energy, or not Tate Energy, Tate Tech was the name of the company, probably did this to get a little bit of favoritism. I mean, I don't know. It just seems weird to me that DJT just keeps flipping and flopping and flipping and flopping and flipping and flopping. Getting involved with fusion energy. Okay. I think that everybody in this room would agree that we need to find some way to have more energy generation than we do today. Especially with all the AI needs. I mean, you heard Oracle just got approval from Michigan for its data center, and I'm hearing other AI companies getting access to plug directly into the grids for their energy. This is going to be a much bigger story. Probably, I think honestly, next year, like late 2026 into 2027, there will be a lot more conversation about energy demand on the grid and how it impacts us. Because think about it. I don't know where you all live. I know you guys live in different places. But if you had a major data center come to your town and plug into your grid and demand a boatload of energy, and mind you, none of these AI data centers are going to be light load energy. They're going to take over a lot of energy. Well, what does that do to the cost of your energy? Because of demand on whatever, I'm in SoCal, so I have Southern California Edison. If I had an AI facility down the road from me and they patch in, my energy costs are going to skyrocket because the Southern California Edison knows they've got a captive audience. I'm not going to say no, I need my power. So yeah, this could really have a big impact on prices of energy. We need, it's going to be a much bigger discussion probably towards the next election, is like how do we get more energy generation, because it's going to cause inflationary pressures on energy prices around the United States and most likely around the world. The company said that the energy costs won't go up with the data center here. And oh, sure about that one, peasant. Do me a favor, write down your energy cost today, and when that thing goes online, you let me know how much your energy changes. I'll all but guarantee you it's going to be significantly higher. I have SDGRE and the most expensive in the... Sorry, Big Ab. San Diego General Electric. Is it more expensive than Southern California Edison? They're crooks, in my opinion. Right here in Kansas City, now they want to look at nuclear adjacent to it. Oh, boy. We're going to need more power. So this is a good play for DJT's board. Let's just get in the energy space. Okay, thanks, Ollie. Tech is a private company. For some reason, I thought they were public. I thought they were a public company, but either way, you merge with them. It's a nice way for Tech to get public exposure. But yeah, I wouldn't touch that with a 10-foot pole. All right, let's see. We're nearing an hour show as usual. Let's talk about tomorrow. We do have a couple things coming up for tomorrow's trading session, the 19th. Oh, man, this will be my last week. And then it's Christmas week next week. My goodness, where has time gone? Just been absolutely flying. So we will get a little bit later on tomorrow, or my guess is later tonight or early tomorrow morning, we'll get that Japanese press release with rate cuts and the press conference. For the U.S., as you can see on the screen here, not a lot of big stuff. You've just got some existing home sales numbers coming out, which might be of interest, right? We want to see those numbers obviously increase because that would mean demand for properties. That is coming out at 10 a.m. Eastern time, so 30 minutes into the trading day. You also have member Williams will be speaking from the FOMC, and we do have it down to kind of a short list for those of you who are following along the President Trump nomination probability. You've got Bowman. A lot of people believe he's going to go with Hassett. You've got an ex-member, Kevin Warsh, and last one would be Waller. Waller is currently on the board, and I actually think it might go to Waller. Waller or Bowman, just because Trump will probably try to do some nice political move and doesn't want to bring in anybody else that's external. But he did mention something like, "Oh yeah, well these guys, they want 1% rates," and he's just basically looking for somebody to cut rates, cut. He wants to put more people on that board. They're going to be cutting rates, so we'll just see how it goes. Nike was down big, and they beat earnings. Nike beat earnings. Everybody today beat earnings. Let's look at the earnings calendar here for today. I know this ad is here. I can't get rid of this gigantic. Oh, good. Get out of there. Go away, ad. Nike beat earnings by 43%. They were supposed to make 37 cents, came out at 53, and apparently they did not like their forecast because the price is down. Fell 5% as of that, and now it's down 9.95% in the after-hour session on their earnings. Womp womp. Not looking very good here. This may be another play for me. Last time I was looking at buying Nike, I kept playing the $70 bounce here, and it was really doing pretty good for me. We'll see. We are currently sitting down below the lows for the last almost a year. We're going back to the lows from June of this year. Way down there. FedEx, they beat. Yeah, we got some nice action there on FedEx. I wouldn't say ripping, Liz. Getting a little ahead. They were up 1.7%. They're up 2% in the after. 2%. I guess we need to establish, what would you say? Rocking, ripping, soaring, shredding. We have to come up with a scale. For that one. But yeah, definitely up for FedEx in the after hour session. Yeah, decent 2% gain. Let's see, Space Lab free with solar energy in outer space. We talked about that the other day, Rob, and the potential for using satellites as data centers, and that makes so much sense. I mean, I listened to several kind of key professionals in the industry talk about it, that these data centers could be attached to satellites. On one side of the satellite is an umbrella of solar panel collectors that always faces the sun. It never turns away from the sun. It's always facing it. Therefore, it's 24-hour energy, and because it's out of our atmosphere, it actually gets more energy. Then on the underside of the umbrella, which is the dark side, it's going to be cold as ice, so you don't need to worry about your cooling costs, which is a big factor for a lot of these data centers. I think that was very, very, very interesting. Sounds like a Waffle House ought to smash, bash, and crash. All right. Well, that's going to do it for. Oh no, we need to look at the earnings calendar for tomorrow. I showed you what was happening, but there's really nothing happening for tomorrow. On the list of things, you've got Paychex and Carnival Cruise Lines, ConAgra Brands, Lamb Weston. That's pretty much it for tomorrow. So kind of a quiet day, and we already went over our economic announcements. So that is it. Thank you for Sunny for asking that question about those ETFs. It will be a wild year. As we get into 2026, we'll see what my aptitude is for doing more and more work. I may build out a table of the ETFs that will be coming out so we can kind of track what those look like. Should Oracle go up now? Not really. You know, the good news from Oracle is they got approval from Michigan for their data center, but the chart. Okay, so Oracle ripping. There you go, Liz. There's your ripping 3.47 after-hour session. They got that approval, which I think is a positive piece. Look, today's price action is a bullish Harami formation for Oracle. It's down inside this gap zone, kind of filling that gap, almost filled it entirely. So if it does bounce, I mean, that would be a great point for it to bounce. I'm still not touching it. I remember I was telling you guys I was looking at selling the 180 puts. I did not do that. I just was a little too skittish, unfortunately. All right, guys, that's going to do it for me. Happy trading for your Friday session. I will see you tomorrow, most likely with a glass of whiskey in hand. If you guys have something you want me to cover or questions you want me to answer on tomorrow's show, just send them in to tradermerlin@gmail.com or put them down below any of the YouTube videos, and I will see you guys tomorrow. Take care.